what is candlesticks? Like, what are they, right? So I made this video specifically for that. We're just gonna walk through, get some pen, get a paper. We're gonna walk through exactly what candlesticks are. If you're looking for the slides or any other resources that I do use in this video, go ahead and join Discord. It's in the description. I'll be there active if you do also have questions that you need to be answered. Besides that, y'all, let's get straight to the video. So, what are candlesticks? Essentially, candlesticks are a visual representation of how the price of an asset moves, such as stocks, gold, or cryptocurrency, changes during a specific period of time. So instead of showing numbers, each candlestick tells a small story about what is happening during that time. So the thing with candlesticks is it's just a visual representation of the market showing you what's going on during that time frame. And learning time frame, we're going to learn that in the next presentation here, but learning time frame is also just as important to understand what is going on with each candlestick. So pretty much to read candlesticks is very easy. When you see it green like this and bullish, it means there's an open, which shows you the beginning of the time period, and there's a close, which shows you the end of the time period, and then there's a high, which will show you the very high of the time period, and a low, which will show you the lowest that it's reached during that time frame. So each time frame, so this can represent 1 minute, 5 minute, 10 minute, 1 hour, 1 day. Again, we'll go deeper into that later, but this just shows you the information that has been collected during that time frame. So a candlestick actually has two parts, and the two parts are the body, which is the big bold part of the candlestick, and then it has the wick, which is the small tiny part. So these are the upper and lower wicks here, and this is the entire body of a candle. As you can see, it can be represented either with a big green candle, which means go up, or a big red candle, which means go down. So a bullish candlestick, essentially what a bullish candlestick means is when the body is green. So when you see a green candlestick like this, it means the prices rose and the market closed higher than it opened. So essentially it's open, low, high, close. That's how you would understand a bullish candlestick. So open, low, high, close. This would be the progression of a bullish candlestick. So bullish meaning up, which means green, but with a lot of platforms you can change it to whatever color you want, but traditionally it would be a green candlestick. It represents buyers, which means buyers are in the market pushing the price up. So if closes higher, buyers are on fire. Just remember that right there. But again, remember this too as well: open, low, high, close. That's how you would tell a bullish candlestick. So essentially all that means is the price opened, it swept the lows, so this is the lowest point that price went, and then it shot all the way up. So it shot all the way up, and then it hit this highest point right here, and then before closing it went down, and then it closed right here. So this is open, low, high, close. This is a bullish candlestick right here. Let's go to the next one. So here we have a bearish candlestick. Essentially what a bearish candlestick is, you'll see it in red, but again it can be multiple colors, but the main color here we're looking at is red, and essentially all it means is when the body is red, the price has fell and the market closed lower than it opened. So pretty much to tell if it's bearish here, it's pretty much just open, high, low, close. So the market opened up at a high, and it opened up and then it swept the highs, and then it made a bearish push down all the way to its lowest point, and then it closed after sweeping liquidity there, and it closed at this point. So it closed lower than it opens. So bearish meaning down, which also means red. So if closed lower, sellers are taking over, because bearish momentum means sellers are in the market. So yeah, just remember that's open, high, low, close for bearish momentum there, and also that it opens up higher than it closes. So here are two representations of a bullish candle and a bearish candle. Again, you can see the green, you can see that it opened low and then it swept low, then it pushed up for the highs up here, then it closed low. So this one would be open, low, high, close. And then for this one, it's the complete opposite. It opened high, it swept the highs here, and then it pushed down to the lows, grabbed some liquidity, and then it closed right here. So it closed under its opening position. So open high, sorry, my bad, low, close. That's how it would look like there. So candlesticks also can show the strength of a market. So if you see a bullish momentum like this, where there's no wicks at all, it just means that the market is pushing upwards. So all this is saying is that the market is having a bullish momentum. And you can see there's a transition between that bullish momentum turning into a strong bearish momentum. So this is the price pushing strong down. Again, I'll show you some examples after this. And all this is showing here is that price pushed up, but then it wicked and then it closed. It's still bullish, but it shows that some sellers are starting to come into the market. This as well, this shows that price pushed all the way up. So this happened here, but then instead of it closing up here, it then pushed all the way back down as sellers are coming into the market, showing a strong rejection, and closed over here. This is showing that it went down and then it shot up and then it went back down. So it showed that there's almost a neutral amount of buyers and sellers into the market. It's still a bullish momentum, but slowly turning into a bearish momentum. And right here is neutral. It meant that this is it just consolidated pretty much. It wicked both directions, showing that there's equal amounts of buyers and sellers, and then it just, closed right here. And then everything I mentioned here, this would be the opposite. So now you're looking at the sellers coming into the market, and same here, you're looking at it going for the sells, but then the buyers are pushing it back up for it to close at this level. And then here, the same thing. And then lastly, a strong bearish momentum with barely any buyers to help push that back up there. Okay, so here we are on the charts, specifically trading view is what we use here. So essentially what you're looking at is, as mentioned before, each candlestick shows a representation of the time. As you can see here, we are now looking at the time frame for the day. So each of these candlesticks will show a individual day. If I do go to the 4 hours here, you can see that each candlestick is showing the information of what happened during that 4-hour session. So in this 4-hour session, we had a bullish push. It wicked up, it swept price up there, as you can see, and then it closed below that highest high there for this candle specifically. If you go down the hour, you see we're getting smaller and smaller information for the hour. So each candlestick here is shown, it would be a representation of what happened during these hours. So the more we go down, the more information is collected at a faster rate, of course, because now you're working with each candlestick being 15 minutes. If we go down to the 5-minute here, you'll see each candlestick now is showing you information on a 5-minute chart. So we go down to the 1 minute, that means every candle you see, just like the 1 day, will show you information of what happened during that minute. So as each minute goes by, it'll print out a candlestick. So at what time was this one? At 14:09 here, this was the candlestick that was printed. Let's go to the day chart here. So essentially what we're looking at here is a bullish momentum, a bullish push up during that day. So this was October 8th, actually. That was yesterday for me, but this will be uploaded I don't even know when. I don't know when I'm gonna upload this, but so all this is saying right here is that price opened up right at this point right here. It swept the lows, and then it pushed up, and as it pushed up, it swept the highs, and then ended up closing right there. That's all that is saying. So this would be an example of a open, low, high, close, because it opened, it swept the lows, it swept the highs, and it closed, showing a bullish momentum to the newest high daily highs right there. And we can see more examples of this happening where, like here, it swept the highs, but then it rejected and closed low. So there was a lot of sellers coming into the market rejecting that high right there, but then ended up just kept going. Or even this would be an example of buyers coming into market taking up positions because they seen that this was the opportunity for market to reverse and push up into the next day. So this would be an open, low, high, sorry, my apologies. This would be an open, high, low, close candle right there. So that's essentially how you would read each candlestick. Is pretty much just you look at the time frame that you're in, which right now we're in the day. So each candlestick would represent a day, and you would just read and understand that, okay, right here, market opened up, it swept the highs, it went lower, and it closed right there. This would be a very volatile candlestick right here, showing barely any momentum happened during that day. All it's showing is that price most likely consolidated and didn't take any range or didn't go anywhere. But yeah, that's pretty much the basics of reading candlesticks. So these are the notes that you guys should take down just so you guys can remember some terms for candlesticks. So open means the price at the beginning of the time period. Close means the price at the end. Highs is just the highest point reached during that time. Lows, the lowest point reached. The body is the thick middle part of the candle showing the distance between the open and the close. The wick or the shadow is a line above or below showing the highest point and the lowest point price has reached. So upper wick and lower wick. Upper wick or upper shadow showing the highest point that price went. Lower wick or lower shadow showing the lowest point price went. Bullish candle, a green candle that closed higher than it opened. And bearish, a red candle that closed lower than it opened. And yeah, candlestick, a visual representation of how the price of an asset moved during a specific time period. I'm gonna finish that there, but this is pretty much what you would need to understand candlesticks. Hopefully you guys now have a better understanding of what candlesticks are. The next video is going to be on time frame and time session or session, whatever you call it, sessions. Okay, so we're going to be doing that for the next video. I'll go ahead, like, subscribe. You're going to want to, and if you also again want to find the resources, tap into the Discord. I will be active there. I trade live too as well, so you can also learn from me. Besides that, I'll see you. Take care.